we'll let Michael and Morley take over, but I just want to comment on Bitcoin and Coinbase. Coinbase has taken a nosedive. It opened in the 300s. It's down, last I checked, it was in the mid 200s or thereabouts, maybe 280. I didn't check today. I have an account. And if you recall, last month I talked about my account on Coinbase. They gave me $5, and then I put in $10, so I had theoretically $15. They took their fee, 99 cents. So that left me with $14.01, theoretically. So my last month, it was fluctuating between 13 and 15 something, or 13 and 16. When I checked earlier today, it was $12 and change. In other words, my $10 is still there, but only because they gave me $5.
Okay.
So that's and of course everyone knows that Elon Musk no longer accepts Bitcoin for purchasing his cars,
Right.
Tesla, but he didn't, apparently to date, he hasn't sold his Bitcoin either. But the last I checked, Bitcoin was under 50, but it may have been over 50, but it's not doing too hot.
All right. So Len, so I think two things should be said. One, so Musk is stepping away somewhat from the automobile purchasing, because I don't know why he didn't realize this before. He realized the amount of energy that is being used to create this blockchain is huge, okay? Huge, okay? Remember we said that for the most part, these are being created in southern state of Washington and northern Oregon because of the hydroelectric power. But the amount of energy that is used to create the blockchains is just out of this world, okay? It matches, just that part, matches some countries in using energy. So that was number one. Number two, probably your investment in COIN is the basic exchange that cryptocurrency is going, any kind of crypto, Bitcoin, Ether, doesn't matter. So that if you want to feel like you want to participate, if you feel like this is the next automobile or airplane, that's probably a decent way. So the market sort of crashed a little today on that end of Musk opening up, and coin fell down to about 250 something one time. I think it closed up around 267. It announced the last quarter, business was excellent. This is, you're buying an exchange. You're not buying a particular coin.
Yeah,
so anything that's being traded is trading somewhat through this, besides private transactions.
Let me just make a comment that I did not buy Coinbase. I bought what I thought initially was an ETF. It turns out to be a closed-end fund that sells at a discount called GBTC.
Yeah, I know.
Yeah, and I think it's Galaxy something or other.
Right.
And I did buy it, and I sold it when I had a small profit because I'm into 45% cash in my account.
Okay.
And that was one of the things I sold because I'm still losing money in my account. All right, as of today. However, I'm being honest. I have a lot of cash, and I haven't decided that I want to. Some of the things that I own are Cathy Wood type stocks.
Right.
That I've been told I should hold for 5 years. I'm not sure where I'm going to be in 5 years. I may be 6 foot under,
Well, we'll come visit you and tell you how it's going. Okay.
Yeah. But, I'm looking at what to do with the money, and I'm not doing anything yet because I'm not sure we're at the bottom. And so I'm just, I know this is not Morley's favorite kind of stock, but I'm looking for a win, and some of the stocks that I have, I like it, but it's sort of nouveau technology. And, you know, I have there's a company called Unity Software, which is a game development software. I liked it, and I put quite a bit into that. And I'm losing a bit. I'm not losing. I'm losing maybe 10%. And there's another company that I liked called Berkeley Light, which sells equipment that allows people to do what single cell type of tests to do select for different formats like antibodies, and do it on a single cell basis, and it's much faster. That it can do it in days instead of months and things like that. And I have another one that's a genetic company, NVIDIA, and NVTA is the symbol. And I bought those three stocks because I'm into science and new technology and computers. And I know that's not recommended for an 83-year-old. And I know Morley and Michael would frown on my doing this, but I'm having some fun.
That's all.
Depends how much money what percentage you put into it. If you put 50% of your portfolio into those stocks, that's really risky. If you put 5%, not a big problem.
Most of my money is being managed by Schwab.
There you go.
My fund account, okay?
Okay.
Yeah. And my Schwab people are doing very well, although for the last few days they've taken a hit too, but today they were up.
Good.
Yeah. All right. I'm going to leave it to Michael and Morley, and
Go ahead, Morley. Why don't you start tonight? Yeah, Morley, go ahead.
We're going to talk about preferred stocks. So whoever asked that question, I don't know if he's here tonight.
He's one of my, have you posted the video yet? Clients.
Okay.
Yeah.
I will talk about preferred stocks. Anybody very familiar with preferred stocks or not familiar at all?
Somewhat.
Yeah, all right. Well, first of all, what is a preferred stock? Preferred stock has preference over a common stock. What that means is that you can't pay dividends to common stockholders before you pay dividends to the preferred stockholders. So they can cut the dividend down for common stockholders. They can not keep, put it out and pay nothing, but they still have to pay the preferred stockholders. But generally, when they stop paying the common stockholders, it's because the company has a problem. They also stop paying the preferred stockholders. But basically, it's a preferred stock. They call it preferred stock because it has the preference before the common stock to get dividends. So there's different types of preferred stocks. One is, I call it a straight preferred stock, and I'll explain what that is. Then there's a perpetual preferred stock, and then it's a convertible preferred stock. And a straight preferred stock has a couple of characteristics, like a bond. It's got a face value. Generally, it's about $25 a share that it comes out at, or some are 50, but most of them are $25 a share. It has a coupon rate like a bond. So it could be, let's say, a 5% coupon. So it pays dividends at 5% of the $25 that it came out at, the face value. And it could pay those dividends. Some pay quarterly, some pay monthly. It has a maturity date, like a bond. When it comes due, it pays back the $25. And it has a call date, which means they can call it before it matures after certain dates. And every preferred stock will have that. The perpetual stock won't have a maturity date. Perpetual stock means it goes out forever. But it also has a call provision and a call date. And then you've got the price. So the other feature of a preferred stock is if the company goes into bankruptcy, it has a call on the assets before any of the shareholders do. It doesn't come before the bondholders, but it comes before the common stockholders. So I have an example here. This is a telephone, has a 5%. Well, let me try another one first.
You want me to share your screen? Yeah, I can make you the co-host.
Okay, I don't have it on the screen.
You're on I mean, I can make you a co-host.
Yeah, but if I don't, I have it on, I printed it off. I
Oh,
didn't,
okay, all right, okay, then I will, okay.
yeah, apologize for that.
Yeah.
I don't know why, but I apologize for it anyway.
No problem.
So for example, here's a telephone, 5.35 is the coupon. Maturity is 11/1/2066. And it sells for $26.04. So you say, who would buy this to go out to 2066? Well, it has a call provision. The call date on this bond is November of 2022. So it's got a little over a year to be called. So 5% coupon, that's a good deal. But you have to remember, you're paying $26 for the preferred stock. You're going to get back $25. So you lose $1, which is 4% of the face value. So it ends up being probably around 1.5%. All right, so let me stop there for a second. That sounds a little confusing. Anybody have a question?
I
on
have a
that?
question. I do. I have a question. Why would you said it was 25? I'm Pete Casano. How are you tonight?
I mean,
Yeah, you said it was callable at 11/20/22, and initially you says it was $25 to buy it, but now you're saying it's $26 because you buy it at a later date.
$25 when it came out.
Yeah.
It issued to the public at $25. Then it trades in the marketplace. So it's trading right now if you want to buy it for $26.
Okay.
Okay,
All
I have a point. Last March, when when the market tanked, there were lots of great bargains out there. And then I picked up one as a mortgage REIT company, Annaly, which invests mostly in government-backed securities. And the price went down to $10. So I scooped it up, and it has recovered to $25 plus. So there is an opportunity for a capital gain if you swoop in when the prices are really depressed.
And for the most part, yeah, Richard, go ahead. Yeah.
Yeah, it seems like a preferred stock other than perpetual is very similar to a bond. Is the reason why you would buy preferred stock over a bond is it because the coupon is higher, because the risk is more, because you're not first in line in case of a bankruptcy? Is that why people would buy that as opposed to investing in a bond?
Yeah, it's a safer investment. And
You're getting a better yield in the bond for the most part, but you're taking a little more risk because the
Right.
bond is higher up on the debt scale.
Right. Yeah, that's
Okay.
what I said. Right.
So it's between the corporate bond and the common stock. That's
Yeah.
where it fits in.
Yeah.
But if you don't usually get it for 10 because this person here bought it as the world was going out of business over the pandemic. Okay. So normally they'll trade between 23 and 27. That'll be the range on a $25 preferred. But you're getting a yield that's hard to get anywhere else.
Now,
And
the earnings
that's all you're buying it for is yield.
and the earnings on preferred, I guess they're called dividends and not called interest.
They're called, right.
Are they like qualified dividends and ordinary dividends? Just like
There's
the common stock?
both. You've got to read on the particular preferred. It can be both ways, either way. Okay,
Yeah.
depending on how they set up the preferred. Most have calls, like Morley said. I've seen once in a while where it's not, but most of it's callable, and that's the issuer. Depending on where interest rates are going, they're funding the company. Is another way to fund the company with debt. So they want that they want that safety valve to pull out if they want to, when interest rates would be real low, and they're still giving you 5 point whatever it is they're giving you. Okay.
Thanks.
I have a question.
Yeah.
How would you get it at the initial offering at $25?
The firm that's underwriting the issue, which could be Morgan Stanley, UBS, some of these larger firms.
Merrill Lynch, yeah.
No,
And how do you find out about that?
well, broker there. In other words, if you don't
Depending
have,
if you, yeah, if you use somebody, if not, you're doing it yourself, you can check the preferred market every day to take a look. I'm sure there's a preferred.com, okay? I think you
Yeah.
just want to check and make sure. You just don't want to buy preferreds like you don't want to buy common stock just because it's a preferred. You want to make sure that the company that's backing it looks like it's going to be in business in 2025, let alone 2066.
Like
So
you'd be
most of
pretty
the
safe
preferred-
buying a JP Morgan or something
Yeah,
like that?
JP
Do
Morgan
they
is
come
a
out
good one,
often?
Bank of America. I would stick with, if you want to get into preferred business, I would stick with the financial institutions. They generally throw off the most that way. And you'll be pretty safe. I would stay away from the risk of when you're starting to see a preferred at 6, 7, 8%. If you want to take that kind of risk, then buy what Len was talking about, an ETF, exchange traded fund. There's a
Yeah.
number of them, and that may be where you want to be, okay? That will give you 6.5, 7 and 7.5 because it has a basket of preferreds, okay?
Oh, I didn't know about that.
Yeah,
Yeah.
so you may want to go that way than the individual preferred. Now
So,
that'll go up and down depending on which way interest rates are going, okay?
mhm.
But if you're just
So-
buying it for yield, the retail investor constantly looks at what the portfolio is and what the portfolio is worth. That's fine when you're doing IBM and Home Depot. And when you're buying fixed income, don't focus. We've said this before. Don't focus as much on the price, okay? Because that's going to be not by the stock market. That's going to be influenced by the bond market and the Federal Reserve. So just make sure that you're getting your coupon, and Morley says most of them are quarterly, that you're getting your coupon that you want and that you'll see the rating on it, that you're not going too far down the rating scale, okay? If you're saying you're only putting 10 or 20,000 to this whole area of preferreds, you can ask me later. I'll recommend a couple of preferred, ETFs, okay?
Yes, I would like to hear your recommendations.
All right, Molly, I'm sorry.
it's fine.
Thank you.
So that's a straight preferred. And you have to be a little careful. I wouldn't, if you don't understand the preferred stocks, I wouldn't pick one by yourself. I find, somebody like Michael who, can look at the preferred stock and see, are you buying something that could be called? Are you buying something that may not be called? It depends, where the interest rates are and what the coupon is. So generally in this one, the telephone, the 5.35%, they probably can refinance that at a little bit less. So it's a good chance they would call it. But let's say they don't call it. Well, then you can keep going holding that preferred stock, but they can call it anytime after that, usually 5-year period from when it comes out.
I assume that it was issued at a higher interest rate or a higher yield. And because of interest rates,
I'm trying.
what was it when at par?
Well, it depends, Len, it depends on the coupon, okay? And it depends where interest rates are going.
Yeah.
So if you had, let's say, like this gentleman here, he bought at 10 for 20, go back before that when it was selling in the 20s. If that had a coupon of 5.5 or 5 3/4, and all of a sudden the Fed opened up the candy jar and said, we're backing all kinds of fixed income from corporate bonds right on down the line, okay? And interest rates dropped for the most part almost to zero. All of a sudden you look like a genius at a 5 3/4 preferred. It's probably selling somewhere between 26 and 27, maybe 27.5, okay? But again, I'm assuming you're not trading them. I'm assuming that you're going ahead and getting it for its coupon and buying at a reasonable price. It's basically another part of your fixed income portfolio. Okay.
Yeah, this came out in 2017. So
Okay, so there you go.
these will
Right.
generally come out with a 5-year call protection. It means that they can't call it for 5 years.
Right.
So 2017, 5 years is 2022. So that's the first call date. And anytime after that, it can be called away. So let's say interest rates go down to 2%. for a preferred stock like this. This stock will be called, and they'll sell a new preferred issue, and you'll get your money back in 2 years, in 2022.
Right.
That's if rates fall down substantially, because then they'll call it. If rates go up substantially, let's say rates go up to 10%, they're not going to call it. Okay, but you're going to see that the price is going to come down because yields are a lot higher. The coupon's the same as it was before. So that's what happens with bonds and preferred stock, go the opposite way of interest rates. So any questions on a straight preferred stock? Okay. The next one that I want to talk about, I should say, is called a cumulative preferred stock. The only difference between this cumulative preferred stock and a preferred stock is that the dividends that are due, if they're not paid, are cumulative, so that they have to pay those dividends in arrears all the way back before they can pay any dividends to the common stockholder. So that's a cumulative preferred stock. So you have a little bit more safety there, that if they do cut the dividend, you can still earn dividends if they ever come back and pay the dividends again. Is that one clear? Yeah.
Yeah, but the thing is, most financial institutions don't issue cumulative preferred stock because of the way they're characterized, and I forget the term. But most, like if you do Morgan or any of the banks, they're not cumulative preferred. They're just regular preferred.
You're right.
Yeah, but generally the companies that have cumulative preferred stocks, they need help to sell the preferred stock, so they make it cumulative. I think that would be the only reason that you would put that in there.
Yeah, I agree. And I agree that as for a general investor not willing to spend a lot of time doing the research, probably the best way to go is with an ETF or something like that. But I will point out, last March, there were some amazing bargains out there. And when I talked about Annaly, they're a mortgage REIT, and most people get really afraid about mortgage REITs. But Annaly only invested pretty much in government guaranteed mortgages. And when the market tanked, the Fed said, we'll buy them all. So there was a guaranteed floor for that. And even so, the preferred stocks went down to 15 or 10. And this is pretty much a guaranteed investment, because even if the company went bankrupt, their portfolio was still worth what they said it was worth. So
Yeah, I know, but
so
there's
to
a
me,
risk.
I just couldn't resist.
The risk, okay, so the risk I'm
something.
taking that, okay, is what happens is when the world comes apart, and that's why the Federal Reserve stepped up. If the Federal Reserve didn't step up and did what it did, you may have still had $10 a share going on. So what
I wouldn't have bought it unless the Fed said that. But even in the face of the Fed saying that, it still went down to 10.
Yeah, because there was such panic going on that nobody could see around the corner, okay? So at least when the Fed said, we're almost going to, see, the Fed almost said in 2 steps. They said, first, we're going to buy a certain amount of debt, okay? Then they almost
said they were pretty open-ended on it.
That was the second time they came, because the country was in such a panic, all right? So then they said almost, we'll buy anything, including corporates. They went to high yields, okay? That's what saved you, okay? If the Fed didn't step in, okay, you would, especially in the real estate market where you were stepping, okay, you may have found problems. You may have only gotten paid a certain amount of cents on your dollar. So either you did it after the Fed stepped in and the market didn't react. But if you went ahead and got it without the Fed stepping into what it did, then it could have been a whole different situation.
Well, I do agree with that. But the point is, I wouldn't have bought it unless it went down to 10.
Fine. Okay, great. So you purchased, you made a very timely purchase.
But you could have bought a lot of other things that did just as well or better. That was a good time to buy. Did you buy anything else besides that?
No, I really didn't. I basically divested myself of my bonds because they were paying nothing, and it was all risk and no reward. So most of that, it ended up in cash, and then I just bought some preferred to replace some of that bond.
Okay. You would have a higher return on even buying a quality common stock at that point, because the whole country hadn't dealt with a pandemic for 102 years. So we didn't know where we were going. But it turned out so that the averages, the S&P, the Dow, was pretty much at the bottom before the Fed stepped in. You were down about 35%. So whatever you would have bought in that small window period of time, you would have made a very nice gain. Now, you may, if you sold it, you may have been in some short-term capital gains, but hey, you know what? You made money, and sometimes you have to pay the price. But as Morley's saying, if you bought in the second quarter, take a look at your performance of your portfolio 1 year, this year to the last year. It's way out of whack because we were down 35% last year. So, don't hurt yourself patting yourself on the back because you're comparing probably an overpriced market now to a underpriced market because of the pandemic last year. It'll generally pull up your 3 and 5 year performance because you had this pull this year on that. You have to wait for 22 to 23 to shake out. The market appears to me to be a little pricey at this point by taking a look at multiples and taking a look at forward earnings versus the price of either the indices or the individual companies. Okay. And if you're big tech holders, if the Fed feels like they have to move in the second half of this year, get ready, okay? Because you're going to get whacked. Because those are the guys that put out for the most debt. You worry less about J&J and P&G and so on and so forth than your latest, tech of the day or whatever. Okay.
What'd you pay for that, Annalie?
I'm
How much
sorry.
did you pay for Annalie?
You said $10, didn't you? $10 on the preferred? Did you buy it for 10? You said?
I bought Annalie Preferred I bought it a number of times between $10 and $14. And by the way, they called them after that, so I got my $25 and I got 15% interest during the interim.
Good.
I'm just looking at the stock. The stock is selling for around $9 right now.
Yeah.
And you bought the preferred. The other type of preferred, and you don't see too many of them, is convertible preferred.
Right.
And that is, it's a preferred stock, but it can be converted into the common stocks. And each one has a different amount of shares and different parameters, but it will go up with the stock. Unlike a straight preferred, that's not going to go up if the stock goes up. It's only going to change if interest rates change. So that's the 3 types of preferred: the straight preferred, the perpetual preferred, cumulative preferred, and convertible preferred.
So you're basically buying a preferred for the most part, you're buying it as a debt instrument, and you're going to get the one-off where you buy and then wait till buying the next crisis. You could get some capital gains. But if you're buying preferreds, you're augmenting your portfolio to get better yield because interest rates are so low. Okay. By this time next year, I think we'll be seeing some higher interest rates. The price of the preferreds will come back a little bit, but you'll be able to buy some better corporate paper with a higher yield. The Fed is going to drag their feet because the government has such debt that's what they're most concerned about, as the government borrowing and keeping these lower interest rates as best as possible keeps the government not having to pay back so much on on the treasuries and any other kind of government paper. So sooner or later, going to have to do it, but you're going to have to drag them kicking and screaming, and probably inflation is what's going to do it. We'll see. Right now, we're just in the middle of what they're calling transitory inflation, which means, your supply chain right now is so broken that all 9 of you on here want to go out to eat. You want to go on a vacation. You want this, you want that. But no, the supply isn't there. Okay. My wife wanted to redo a room. She brought somebody in. She says, don't do it till the first quarter of 22. There's no materials and you can't get contractors because everybody wants the same thing. Okay. So you're going to have some transitory inflation, no different than the gas stations sticking it in North Carolina and Virginia. Oh, we don't have any gas. Just went up a quarter. Okay. Here in Jersey, gas went up 10 cents. You weren't even affected, but it's opportunistic. Welcome to capitalism. All right. So that's what you're probably going to have to do. So slowly, the Fed is going to be pulled along, maybe by the bond market, to start to raise interest rates, which is going to be a problem because the government is going to have to pay more on all this money that they borrowed. Okay. So, you get into some social issues along the line here too, but we're just talking financial. Anybody, you have any other questions, or what do you think about the market? What are you doing? You liquidating, taking some profits?
I cashed, on my fund account, I call it fund account, that I'm doing myself. I cashed in and I did fairly well. I didn't make a lot of money, but I didn't lose on the part that I cashed in on.
Well, let's hope that you make. That's why we're doing all of this, right?
Yeah, but on the stocks that I still hold, it's taken a dive. Yeah.
Did anybody buy when the market pulled back for 2 or 3 days? Anybody make any purchases? No. Okay.
Can I make one other comment about preferred before I shut up?
Absolutely.
There's what we were talking about before were fixed rate preferred. In other words, there's a fixed rate associated with it before the call time, and then it's whatever. But there's also the more common one these days is the fixed to float. And you got to be really careful if you're going to buy a preferred stock about thinking about that, because fixed to float sounds good. What happens is there's a fixed rate up until a certain time. And after that time, it becomes a floating rate based on some percentage plus what the LIBOR is paying or whatever the LIBOR replacement is. And that sounds like a great deal inflation-wise, unless the inflation stays down, in which case the rate that you're going to get is going to go down, not up. And the other thing is that Fidelity, which I use, does not allow me to buy fixed to float preferreds on my own. I have to call them, which I hate.
Okay. Yeah, I mean, again, why are you buying the preferred to start off with? So now you want the vehicle to do two things. You want it to be super sensitive to rates going up and going down, and then you want the fixed on top of that. Okay, so
I prefer to get a fixed rate if I can in a decent company.
Okay,
and at least I know what I'm getting.
Right, I agree. So if any of you are concerned about inflation setting in, so this is a question that's going to be on everybody's mind over the next 6 to 12 months. What kind of inflation are we dealing with? We haven't dealt with inflation since, I don't know, real inflation. All of us remember the 70s. Many people don't, because either they weren't alive or they don't remember. So I don't think you're going to have that type of inflation, okay? However, there are positions that you can take that go the other way. Is anybody familiar with TIPS? Do you know what that is? No. Okay, so that you do? Who does?
Well, I do. It's a treasury and protected, right?
Right, inflation
Interest
protected, right,
protected.
securities, right. So you can buy it under that symbol, TIP, yeah. Vanguard also has one, I think it's VTIP, if you take a look at it. I haven't been super successful in the past. You almost like tie up money, and if it shoots up, if interest rates shoot up a lot, they'll go up, where everything on the fixed goes down in value. That's why I say, don't get too upset during this period that your fixed income value, the value, and that's what many of you look at. You look at your monthly or daily or weekly portfolio. Oh my God, I lost $5,000. Take a look at where you lost or where you gained, okay? Because if you lost it on the fixed income side, you really didn't lose it. On the fixed income side, you're looking for your yield, reasonably safe yield, because that's what's giving you your monthly situation, okay? If you lost it on your equity side, now take a look and see what's going on with equities. Well, we may have all diminished our fossil fuel situation until these characters in Russia stuck it to Colonial Pipeline then you all made a few bucks on whether you were doing refiners or oil and so on and so forth. The minute these guys paid $5 million to them, probably in Len's Bitcoin, that he paid it, then all of a sudden, now your oil stocks are going down, all right? So separate your portfolio, if it's 50-50, 60-40, 70-30, whatever it is. Separate your portfolio. Don't confuse the valuation of your fixed income investments. Don't worry about them. Worry about them if the price and the yield start to really divert. So in other words, the yield, that indicates that whoever you own, whether it's dividends or even fixed income, either they're taking a hell of a lot of risk, okay? And be careful, okay? Because they're taking a lot of risk. Maybe business is bad, like a dividend on a stock, all right? You had like Exxon way out of whack, all right? You want to be careful, not that Exxon's going to go out of business, but were they going to reduce the dividends? Because most of the times when yields start to go above 5.5% on a dividend play, something's going on, okay? So don't just, go in to sell. Know what your fixed income is for. It's to give you that steady monthly income, especially if the market drops. If the market drops 5, 10, or 15% now, we're all going to be unhappy. Not such a big deal, okay? The market is probably inflated here, all right? And it's inflated basically because we're trying to get back to the new normal, okay? And the new normal is not going to be like the old normal. There's going to be a dislocation for 6 to 9, maybe 12 months of supply and demand. So if Main Street or whatever the companies are reporting over the next few quarters disappoint, you're going to get whacked a little, okay? So as long as you know you're going to get whacked, you're fine. If not, take some of your profits off the table, especially if in your IRA, you're not going to be taxed one way or another. Okay, so that's a good way to take a look at it. And like I say, break your portfolio up between fixed and equity.
Yeah, Michael, is this a good time to buy?
Depends what you're buying. In other words, depends what you're looking at. It feels like there's rotation from technology to value. It feels that way right now, okay? I think if you take a look at the forward PE on any tech stocks, they're so out of whack historically, okay? Now, you can make a case in me, and I would agree because I'm making money on it. Microsoft is knocking the cover off the ball. Good, okay? Probably I should own 1,000 shares, not 100 shares. But those are the kinds of things that you have to take a look at, and you gotta, like Kramer says, do your homework, okay? So, and if you don't want to do your homework, then just let the portfolio ride, your year to year, you're making money because it was so bad last year, especially second quarter. But the market started to turn around in the third quarter of last year. So your year-to-year comparison starting late summer or fall, you're not going to be such a rocket scientist as you are now. But it's okay. You've gotten through this crisis all right. And it looks like even between the two administrations, if this vaccine seems to be everything it appears to be, and it does at this point, I think we're going to get through this. But I had clients I'm buying airlines, I'm buying hotels, I'm buying this and that. You better wait till 22 and 23 before that kind of business starts to come back and shows up. Nobody's going internationally because nobody has handled the crisis outside of Israel and us as well as we've done it, okay? You don't want to be in Israel right now to get bombed. So there's no international travel. When you buy these big companies, you got to know what the mix of their business is versus the US, Notice how gingerly everybody's dealing with China. The past president, he was just a big mouth, but he talked one way and did nothing. This one, very cautious. A lot of big companies are starting to do 30, 40, 50% of their business in China, 1.1 billion in people. It's a lot of people, okay? It's getting competitive, but that's where it is. So when you say about domestic companies, unless you're getting them at the very beginning of their history, the well-developed companies, they're all global, from the P&Gs to the Coca-Colas, so on and so forth. So if this pandemic hasn't turned around in Europe, Africa, and Asia, parts of Asia, their business is going to be impacted. You'll watch third or fourth quarter. So I wouldn't get overly excited here about whatever the new normal is until you see it. Definitely not on the airlines and the hotels yet. All right. I think there are other better plays, from that type of business. I think you got a better shot with the banks. Yeah.
I'm going to say, in answer to Len's question, Len's got cash. Question would be, let's say, how do you know when and how to get back into the market? Let's assume that you did a lot of selling and you built up a lot of cash. What's the decision-making process to say, how do I go back into the market and when?
That's what I'm asking.
Okay, so let's see what some of the people here, have any thoughts on that. Who did sell a lot before, let's say in the last couple of months?
Well, last month,
Money market's like really tough.
cash, so that's what I did.
Okay.
I'm
So-
sorry. What did you say, Gary?
The timing in the market's tough, and I usually get it wrong. So don't ask me for advice.
Okay, we won't. Okay,
But I do have a question,
sure.
and I apologize because I came in late. I had another obligation. But a couple of meetings ago, we were talking about preferred stocks, but the ETF PFF.
Yeah.
Did you guys talk about that today?
We didn't talk about that.
Okay.
You can take a look at that, and take a look at D like in David, N like in Nancy, P like in Peter. Those are two ETFs that deal not exclusively in preferreds, but enough that you'd be in the preferred game. Okay. Good
What
yield.
were they again?
DNP, Duff and Phelps, and what was it? PPF, you said? PPF. That's
PFF.
backed by BlackRock. Yeah.
So there's another one I found when I was getting ready to buy this, and I was researching, and there's another one that's the symbol is PFFD, which
Okay.
is very similar, except the expense ratio is literally half.
Okay.
And the performance and looks really similar to me. That's the one I ended up buying.
Oh, good.
I just wonder if anyone heard of that one or if they have any opinion on it.
No, again, if you're going to buy them, I go back to what I just said before. Buy them for the fixed income.
Exactly. Well, it's the only
It's
reason.
we're not talking total return. On total return, we're talking about a company, a stock. I look at IBM when it was back at 132 with a good dividend, and if it could go to 145, that's what I'm
Right.
talking about.
Well,
Total.
these are just for dividend.
Yeah. So
And
these are
then when I came in,
just
the other
income.
thing, you guys are talking about Annaly Capital. I know you're talking about the preferreds, but I own Annaly Capital. But what I realized recently on it is it's a non-qualified dividend.
Right.
So it pays a nice dividend, but the tax rate's much higher, especially if you're still working.
Right. Exactly. That's
When
why.
I bought Annaly, I put it in my IRA, so I was not concerned about
There you
that.
go.
IRA is the better place to buy it.
Yeah.
Because it pays a high dividend because it's a REIT, but it's high tax rate.
I'll tell you, as we all age, if you're running portfolios in the IRA and let's just call it an after-tax portfolio, you'd be wise, take your risks over in the IRA for
Always.
reason for taxes. And, if you get whacked by a couple of bad calls, it's not the end of the world for your IRA, okay? How many of you that are running your IRA generate enough income for your RMD every year? Everybody? Is everybody doing that? Yes,
Yeah,
no,
I'm not
everybody?
RMD yet, so
Schwab does it for me.
I'm still below the threshold, so I don't have to do that yet.
Oh, who's below the threshold? You are?
Gary, me.
Well,
72 now, you know that,
Yeah,
right?
I'm
That was
62.
up in the cares. You're 62. Okay, great. You
I
don't
got
even have
time.
to worry about it. All right. So just
Yeah.
quickly, as you approach 72 over the next 10 years, take a look. This could change over the next 10 years, but let's just use it for now. Pretty much your first year, the government requires you to take about 4.5% out of the amount that was on 12/31 when you're 71, 12/31,
Okay.
what the portfolio is at, okay? So make it easy, $1 million, 4.5%, 45,000 gross, okay? So between all of these things, or among all these things we're talking about, take a look and try to get your portfolio to manufacture for you a yield that'll come up to that, or very close.
That's pretty tough,
i.e.
4.5%.
I'm sorry?
4.5% is a tough yield to get in today's environment.
Exactly. So try to get as close as you can, and that's what the annuity business was all about, okay? So people that get sell annuities and you pay 4, 5, 6, 7%, depending on the annuity, you can do it yourself, okay? Or if you can't, then call somebody to help you. But between dividends and fixed income, so you're 62, build that along as you go along, so that as you get closer, and let's just, for the sake in your IRA, you're 80-20 or 75-25. So every 2 or 3 years, move that down 5%. Yeah, because
Good.
you have a shorter runway, I think, unless you live to 105. But
Yeah,
let's just
not
assume.
likely.
Yeah, so let's just assume you have a shorter runway. So as your runway shortens, bring
Okay.
your equity exposure down and up your fixed income. And that way you got 10 years, you got plenty of time.
So what are you guys doing? You're older than me. What are you doing for fixed income now when if you want to buy a CD, it's paying, 0.5%,
Yeah.
what are you guys doing? It's a
Molly,
tough
what are you
time to
doing
retire.
now for fixed income?
There's not much you can do if you're buying quality bonds short term. 10-year treasury is 1.5%. So if you want to stay short, let's say 5 years or less, you're talking about under 1%. So what we do is, let's say 30% of the portfolio is going to go to fixed income. Okay, we'll take maybe anywhere from 15 to 30% of that money and put it into the high yield investments that pay 6, 7%. We've added risk, but to get a better return, you need to add risk. So, there's a lot of these closed-end funds that are fixed income type funds that are paying, as I said, anywhere from 5 to 7, 8%.
The high yield bond funds?
Yeah, for the most part, they're either high yield bonds, preferreds. They're taking risks that you don't. And also, we talked about it, but raise your hand if you want to go again, leverage, okay? So these closed-end, we call them ETFs, exchange traded funds. So what they'll do is that they'll raise, let's say, $100 million, okay? A BlackRock, a Nuveen, Duff and Phelps, okay? Will raise, and they'll go ahead to the bank and they'll borrow on the 100 million. They may borrow another 25 or 50 million, all right? So they've got more money to work with to get that additional yield, and will take more risk, okay? So decide on what you want to do with that. Yeah, go ahead.
The other thing you could do, which I did, was some time ago, I got out of all my long-term bonds because the way the interest rates were going, there was just no reward and it was all risk. So what I did was I kind of split it up into short-term bonds, which paid not a lot less than the long-term bonds were paying. And then I began to get into preferred stock. Now, I do a lot of research in preferred stocks, so I pick individual ones. But I agree that you should probably go with the ETF, and you probably get around 5%.
Oh, yeah, you'll even do better. On some ETFs, you'll even do better. But again, don't only go for the yield, mix it up, because the higher yield, the higher the risk, okay? And you want to review your portfolio quarter, every half a year, because as you're moving along through your 60s, you want to go ahead and do that. Because if you get whacked in a bad decade of the 70s, or you get whacked in a 2008 financial crisis again, you don't have that much time to make it as your children or a 30-something or a 40-something. So you want to keep moving that portfolio along to get close to that annuity-like type of portfolio by the time you're 72 and 73. Okay?
Michael, the one secure stock that I have it's in my IRA, I'm not managing it, is AT&T, and I think that's close to 6%. At one point,
It
it was
is. Yeah.
7%.
Yeah.
I didn't pick it, it's just one of those,
We own a lot of it. It's been disappointing because we bought it for total return. Most of the analysts, have a target of 33, 34, and God, it was sitting in the high 20s forever. Finally selling now between 31 and 32. So, yeah.
Under these circumstances, what I've done with AT&T is I don't own very much of it.
Uh-huh.
But if you're into options at all,
Yeah.
if you sell the puts
Yep.
on a monthly basis, ladder them, you can make more than the 6% dividend, and you don't
Yeah,
have to
but
own
you
the
gotta-
stock until it goes down.
Yeah, I mean, you could even more conservatively sell the calls, okay? And it never gets to that call price, okay? But before you start getting in puts and calls, you got to be comfortable to know
Agreed.
what you're doing, okay?
Agreed. Anybody getting into options needs to do this on paper for about a year before they spend the first dollar.
Right. Or at that point, then take part of that portfolio and get somebody to help you. In other words, if that's what you want to do, that's a major way to hedge against what's going on in the marketplace. I agree. You want to be careful here, because I'm not clear myself which way the market's going. The market will not react well to a runaway type of inflation. I don't see that, but it will not react well. If we have creeping inflation, that's fine, because most of the quality companies will be able to raise prices on the products that they have without much pushback, okay? So you want to be careful of that. You may want to start to shave a little of your technology holdings because they are the big borrowers, just naturally, okay? Long, as you'll always hear on CNBC, long term. Well, tell me here, maybe 62 years old, he may be long term, okay? How many of the people that we speak to are really long term? When they talk long term, they're talking 7, 10, 15 years. Our long term is much closer to 2 to 5, all right? Again, whether you need the money, whether you don't, you've got to break that out as to what each of you individually need and don't need, all right? And then make that decision. Like Len, he likes to play a little. So if he loses, it's not the end of the world. Okay.
yeah, I don't like to lose, so.
Nobody does. But then don't be in the game.
No, well, I'm not,
Baseball, it's a 162 game season. Nobody goes 162 and
well, I think that, for years, Microsoft was in the mid-20s, and now look at it. It's in the.
well, but for a good reason. Good change in management. Okay. It'll be interesting to see along the lines. Watch Intel. Okay. It's been kicked around and beaten up. There may be, I like the new guy that came in. He's the old guy, he left and now came back. I think this government may, because of such a chip shortage. So did we discuss why is there such a chip shortage? Where's my expert here? Steve, why do we have a chip shortage?
Steve, you have to unmute.
Yeah, I did.
Hi, Steve.
Hey, Doug.
Why do we have such a chip shortage?
There's a few reasons. The world is very nervous about China going into Taiwan.
Correct.
Taiwan Semiconductor has a problem in producing ultra pure water, which is a requirement for chip manufacturing.
Right.
It's 1,000 times more pure than drinking water, and it consumes a ton of energy to create it.
Yep.
So they're having that same problem with the environment.
Right.
So that's a second issue. The manufacture of 7 nanometer chips is they're about the only one doing it. There's one or two other companies.
They're ahead of the rest of the world. Yep.
And the rest of the world. So the problem with that is they're the leader in that, and that goes into every phone. Basically, all of the really small stuff is the 7 nanometer stuff.
Right.
So that's a problem, and the shortage is showing up in automobiles, big time. They can't get the chips to build the cars.
And that's the key problem. Globally, worldwide, that's a $9 trillion business, okay? They forgot to tell the other guys, oh, we're not selling you a car anymore. We're selling you a computer on wheels, okay?
Exactly.
And when that didn't happen, nobody reacted, okay? Because it's not, as Steve says, it's not easy to do. So TSC is the symbol for Taiwan Semiconductor. So what are they doing? They're building a factory right here in Arizona, okay? Intel is now trying to convince the government to either loan them or go in as a partner so that they can compete because they're not down at that 7 wafer yet.
That's
So
right.
Intel kind of fell asleep at the switch where they owned this business for the previous 25, 30 years going back, and then let it get away from them in the last 5, 8, 10 years. Okay.
I believe the government's going to step in and
I
help
do
them.
too.
Yeah.
So
so do
just
I.
going back, watch Intel. It has a decent dividend. Okay. And the other one, so this is under the heading, everything old is new again. Look at Cisco, just got upgraded. Okay. Networking. They've been moving. They would like their management and so on and so forth. They just all raise prices based on, by prices, I mean target price, in the last week or so on Cisco. So you've got some quality companies that, in due respect to Len, you don't have to chase the latest, thing that will benefit from new technology. And some of the old guys are stepping in and give you a dividend on top of that. So that may be one way to take a look, that if you see prices coming down, step into those kind of companies. They're kind of like, they have a proven track record.
I thought I heard that IBM had come up with a new chip that's even better than the 7 nanometers.
Yeah,
Well,
they haven't
but
proved-
you know what? They're not making the chips either, right? Everybody, Apple is, they're all hung up. They just go ahead and they subcontract it out, okay? Well, you know what? There's no place to go right now. This is really a difficult, as Steve can tell us, this is really a difficult process to manufacture chips.
Yeah,
Okay.
the other issue you have is the computers that do Bitcoin. That's the big problem
There you
as
go.
well.
Right.
And China's building those computers and demanding those chips because of it was up at 60,000. Now it's
Sure.
58,000, right?
Yep.
So one of the Elon Musk things is his, you know what? It reminds me of the blood diamonds. Remember years ago, people wouldn't buy diamonds that were dug out of South America?
South Africa.
South Africa, remember that?
Yep.
Well, that's what's going on with this. Bitcoins that are manufactured, because of the environment issue,
Yep.
they're saying that they don't want to deal with it now. They don't want their company trading in Bitcoin because it's only making the environment worse. So
Yeah, I think
that's a big issue.
Yeah, Len just mentioned that it dropped below 49,000 Bitcoin.
Yeah.
Again, I said that, I'll say it again. It's an asset class. It's not a currency, okay? If you want to own it, just know that you're owning it as an asset class, and it goes up and it goes down, okay? So that's, I think that's enough almost said about that area. And it won't be a currency until it gets backed and stabilized, okay? And you just have to wait it out. Everything goes through has its day in the sun, all right? So we'll see how this washes out in the next 3 to 5 years.
Most of the closed-end funds seem to, from what I understand, are selling at a discount, and they're somewhat highly variable leverage, anywhere from.
They are. And and some of these, now the risk of taking, as I said before, closed-end funds and getting it. So I said to you, they leverage themselves. So interest rates are 0. If that moves up, you'll see all of these funds in value move down a bit. So again, I don't know what you're paying for and when doing your trading, so on and so forth. It won't hurt you that if you have 10, 20, 50,000 on the sidelines, 100,000, go in gradually, okay? Because that will then, you can cost average yourself because these guys are going to fall back a little. It's going to cost them more to leverage themselves. That's the negative on rising interest rates. But we can't go down any further. So there's only one place to go, and that's up. We're holding steady right now for the time being. Okay.
Another reason that I heard why there's a chip shortage is that the American companies, they developed the chips and then they sent them over to China to manufacture. So all of the manufacturing of these things is in China, and we don't manufacture that many chips. So at least, the ability to manufacture the chips that are required.
Well, that's why this guy that came back to Intel, he wants to do that. It's highly skilled. It's expensive here in this country, but at least you can control a little of your own destiny. Okay. So that's what you're going to have to balance it. That's why you can have these chips or phones so inexpensive, because the parts that are made up of it is not crazy. Okay. And again, automobiles that nobody forecasted in 2015, you go lease or purchase a car, you don't have to want to know about the horsepower or whatever. You're just interested in the computer parts of it. And now if we're all moving toward EVs, electric vehicles, that's basically what you're buying. Okay. You're not buying engines or, those days are gone by. So, and again, another factor to consider over these next 12 to 24 months, how many people are going back to work? How many people are going to require, well, I'll give you an example. I have one son that is an employee of Google, okay, here in New York. They've got to be very careful because the hottest commodity is probably code writers and software engineers, right? So they've got to be very careful about requiring these people to come into the office, because already Microsoft and who else was it? Amazon has told their people indefinitely you can work remotely from home. So these are very valued employees of what we're talking about. And it turns out Google is walking a very fine line here, because they don't want to lose these key guys, or women too, I'm sure, key people.
The new normal in Monroe, as of June 9th, the municipal building will be open to the public.
There you go.
It's been closed, but they're going to require you to wear a mask initially anyway, and they're going to require that they take your temperature. I think that taking your temperature is sort of a little bit of a joke to me. And that's the start of, in New Jersey anyway, of coming back to what we call the new normal.
Yep. I think probably as we go through the end of the summer, I think the biggest problem is going to be is, so if we're going into a supermarket, how do we know who's vaccinated and who's not? Obviously, the vaccination works very well, okay? But how do we know? You're not wearing a badge one way or another.
Mike, did you see what the CDC?
Well, the thing is,
CDC said, don't worry about it. Just
don't wear a mask.
You're protected.
That's it.
I'll put on my microbiology hat here. If you're vaccinated, don't worry about it, right? You're protected.
Right.
The only problem is if you meet somebody who's not vaccinated, you might pick it up, and it's a small chance you might pass it on to somebody in your family who's not vaccinated.
Yep.
As we move down the age chain and more children get vaccinated, it's not going to be a problem.
Yeah, I
Already
think
today, by the way, the
Yeah.
CDC announced that outdoors or indoors, you really don't need to wear a mask or socially distance, except certain circumstances indoors, like crowded places.
Right.
But other than that, I think you're going to lose the mask pretty much.
I kind of agree with you. I think that's going to happen. And you could see Yankee Stadium, they're putting you, if you show your vaccination, you can sit next to each other. Non-vaccinated, you got to be still 6 feet apart. Now that may change, but
The
that's
CDC guidance is subject to more restrictive state laws, like the local QH will still require masks for pools and gyms or whatever. But since this is an election year, I'm sure as we get closer to the primary in November, Murphy will ease things up even more.
I agree. I think
Mary, what do you think? Gary?
I'm an extreme. I think the whole thing's crazy. If you look at the science from a medical standpoint, I read dozens, if not hundreds of journals, and the efficacy of wearing a mask is minimal at best, and especially now. So in my opinion, I would just open everything up. If you're vaccinated, you don't have to worry about it. You're not going to die from COVID. And if you haven't been vaccinated, then wear a mask and go get the vaccine. It's available to anybody. You can go anywhere in the corner and get it now.
You know what the
So
trouble with that outlook is that the people that don't seem to want to get vaccinated don't want to seem to wear a mask either.
Well, it doesn't matter because it's them. It's
I'm sorry?
that's them. It's not. It just it won't affect
I know,
anybody.
but
who's had
why
the vaccine.
why would we want them to then
don't.
infect
But,
other
but that's the risk
people?
they take. If you
Yeah, I know, but you know what? It's more than their risk, okay? It's the risk our hospitals, our healthcare workers make. That's
I
where the
work in a
risk is.
hospital. I work in a
Okay.
hospital, and there's no risk. If you have the vaccine, there's virtually no risk. So that's my opinion. So I tend to be extreme, but that's the opinion of most doctors. Unless you're actually in like intubating a COVID patient. But once you have the vaccine, you're not dying from COVID. You're much more likely to die from getting hit by lightning. Is the reality, and everyone's sort of scared about this thing. But I've visited people after my vaccine. I've visited people who've had COVID, and I wasn't worried about it. I'd go on a subway right now.
How many people are dying in the United States now of COVID?
How many people dying who've had the vaccine? So I'm not saying people who haven't had the vaccine.
I'm not concerned about the people who have vaccine. I'm concerned about the people that seem to resist taking the vaccine.
But that's
Why would you
choice.
not want it? Why would you not want to take the vaccine?
I don't have an answer for that, but there was lots of
Okay.
people, including
But
some nurses that I know.
1/3 of American adults don't seem to want to take it.
Right. But ultimately, it's going to be their responsibility to wear a mask, to isolate themselves, and not join the rest of society.
And what if they don't?
They'll just have to stay inside. They won't go to a movie. They won't go to the mall. They won't go out for dinner. If you're worried about that, then don't go out for dinner.
Because we're going to have to show our vaccination.
If you ask them, in my world, I wouldn't have any of that because I would put a sign up. If you haven't had a vaccine, enter at your own risk. That's what I would do. But ultimately, people have to be responsible for their own actions. And if the vaccine's available and it's extremely safe, that's an individual choice.
I mean,
That's my opinion, though.
That's what the CDC came out with today.
Right.
Yeah, no, I agree.
I think what you have is two things. You have the fear of people. People are going to ride around in their cars with masks on. I mean, they've scared people to death with this stuff. So that's going to, getting people to buy into it is going to be a whole lot harder. And then you got the politicians. I don't know what Murphy's going to do. Nobody knows. So,
but ultimately, it's individual choice.
Well, Len just told us municipal building's going to open, but you got to have a mask and you got to have your temperature taken.
Defies logic.
Well, that's our local government doing it.
Yeah, but it's just, that's the initial step. If they see that this is just, don't forget, we've been closed for a year or more, and now we're going to loosen up a bit, and they're being cautious. That's the.
Yeah, but it defies medical logic. They can be cautious, but it defies medical logic, which is why even the CDC, who as of yesterday had basically changed their opinion on it, mainly because there's a guy called Dr. Scott Gottlieb, and he used to be on the FDA. Now he's in he does private research. He's on the board of Pfizer and another company. But he's the one who basically went on CNBC 2 days ago and said, "You should get rid of the masks. You don't need them anymore." And the CDC, under pressure, basically responded to that. That's why they came out today and said that.
I think the CDC is trying to follow the science, and the science is evolving, and the situation is changing. Okay, so last month, when COVID was still raging out there, even though I'm vaccinated, my grandchildren are not, and yes, I would wear a mask everywhere outside. I mean, what's the big deal? And so they're safe, and I'm safe. Now the situation's changing.
I heard there was a study that showed that even though the virus gets into your nostril, if you've been had the Pfizer vaccine, at least, that there are antibodies in the nose that counter that. I don't know whether that's scientifically or medically correct, but that's what I remember reading.
It doesn't really matter whether the antibodies in your nose or not. The point is, if you're vaccinated, you have an immune system that's going to shut down any cell that's infected with the virus before it becomes a super spreader event. So you may become, even though you're vaccinated, you maybe have test positive for the virus, but the data that's coming out shows us that the virus doesn't get very far with you, all right? The vaccines are almost 100% protective against serious COVID, all of them. So that's the bottom line. The bottom line is not whether you can passage the virus. The bottom line is you're not going to get sick if you have the vaccine.
Exactly the point. And when the vaccine's ubiquitously available to anybody who wants to walk in the drugstore in Monroe Plaza right here and just walk in without an appointment and get it, it's basically available to anybody who wants it.
Yeah.
And I was waiting for that point because I've been wearing a mask religiously until I got to the point that it was a month or so after when it was available to everybody, in which case I was deciding I was going to do my civil unrest because I think it's a violation of personal privilege that you have to be forced to wear a mask when there's no scientific evidence of it. And I'm glad that finally the CDC today acquiesced to the pressure and agreed to that, because that's the facts. That's the medical facts.
Well,
Even the
but
CDC says you don't have to wear it even inside, even when you're inside around other people, you don't have to wear a mask if you've been vaccinated.
but the
That's the
Yankee
right decision.
Gary, the Yankee staff, I heard on the TV, they had the J&J vaccine and they tested, many of the staff and coaches
Right.
tested positive.
Right, but none of them got sick.
Okay.
They're running around, doing everything they're doing. They're not sick.
Mhm.
So if you don't get sick, if you test positive, it's like getting the flu, they have no symptoms. So who cares? The only people at risk are the people who didn't get the vaccine. But that's a personal choice. It's free will.
Yeah.
It's the right of being an American.
But we're getting very far from investments.
All right.
Mike, you asked how many
People want
people,
the investment topic, but that's okay.
Mike, you asked how many people died yesterday in the United States. It was 843.
Right. How many of those were vaccinated?
No, I
Don't
think
say that
most of them weren't.
Right.
Okay.
Right.
That's the
I
point.
think the only other excuse me, only other risk that you have is that do some of these people that are unvaccinated, do they contract, get something or carry one of these variants that we get concerned about?
That you have to worry about. And
Right.
if that happens, and then people start getting sick and dying, then we'll be right back to where we started from. That's okay.
Exactly.
That's what you're supposed to do. But you can't have people wear masks all the time in case something happens 3 months from now.
No.
That's like crazy logic.
I think it's a fine line that we're talking about here, okay? I would have hoped, I go back far enough that I remember when the polio vaccine came out, for kids, every kid took it. We weren't worried about individual freedoms and this and that. We wanted to get rid of polio, infantile paralysis. Now, all of a sudden, we got people that are concerned about this. I had a client who's in Naples, Florida. I think I mentioned to you, supermarket. He didn't want anybody to wear masks at all. Well, people were getting sick there, okay? He thought it was his individual freedom. I think there's a fine balance here between individual freedom and doing the right thing for society, okay? And the right thing for society is try to not have these poor people in hospitals and doctors be inundated with thousands and thousands of cases until we finally develop this vaccine.
I
Now-
think
Reach a certain point where
So
that
the-
it's individual choice whether or not they want to be
I'm going
vaccinated.
to
It's
speak as a
not-
lawyer here.
Yeah,
A lot of people exalt this personal freedom like it's inviolate and you can't do anything about it. But the states have always had this police power
Mhm.
to ensure the public safety. And there's a whole panoply of statutes in New Jersey that relate to this and all these extra powers. So our freedom has always been constricted for the benefit of others. So
that's why we have speed limits so nobody kills
that's why we have
themselves.
safety belts.
Exactly.
And that's why we can't smoke indoors. No one is complaining about that. Isn't that a restriction on freedom? But we all agree that's for the public safety. It's the same thing with the mask. But for some reason, the politics in this country is exalting this crazy, extensive individual freedom over the police power.
The problem with the mask also is the scientific evidence is so minimal.
I said my piece.
When you read study after
Okay.
study, it's minimal. And the real reason a mask probably works, okay, is because people who wear masks tend to stay away from each other, okay?
Maybe.
And that works. There's tons of scientific evidence for what they call social distancing, number
Yeah.
one. And the other thing is hand washing. Hand washing is huge. and those are the two things. When you wear a mask, you tend not to get in someone's face. And that's probably the minimal
Except
statistical
the
evidence.
bottom line is, with people beginning to social distance and masking this past winter, guess what? We had no respiratory
No flu.
diseases.
We had no
like
flu.
flu and all this other stuff. It works.
Yeah, it was the
It
lowest.
works.
If people don't,
The thing
go
is,
out,
we're getting to the point where we may not need it anymore, but it definitely did work. It's not a question of personal freedom. It's a question of personal responsibility, as far as I'm
Right.
concerned.
Good point.
no doubt. If everyone stays home and Zooms their meetings and no one goes out to restaurants and no one goes to movies, you'll have less influenza. No doubt about it.
All right, I did try takeout from the Thai restaurant across the street. It's very good.
What's that?
What was that?
New Thai restaurant,
I
namuthai.com.
tried it. It was fun.
And
I
it-
recommend the pad Thai. I had that. That was excellent. But
Yeah,
it's funny.
I
I went in there when the limitations like 35%, they had like 80% people.
follow the social distancing rules. I didn't eat inside. When I went there, the only people there were the staff, and there was one couple, and they told me that if you come in when they first open, there's no one there. But
When I was there, 75% of the tables were full. And they were an open violation, but nobody cared.
Right.
yeah,
Well,
And the
you
food
can
was
pass
very
all the
good.
laws you want, but you have to enforce them. If you don't enforce
Civil
them.
disobedience.
well, Judy won't go inside any restaurant at this time.
Personal, but that's her right. That's what I'm saying. If people are
Exactly.
worried about it, don't go.
Yeah.
That's the beauty about it.
It'll take us the rest of the year and into 22 until we start to move closer to where we were. It's
I
gonna
think a big
just take
step
people.
today. Today was a big step with the CDC
Yeah,
saying that.
it's just gonna
Huge.
take people time to get used to doing what they do.
Yeah.
Exactly.
All right,
That's good.
if there are
Len,
no
thank
more
you,
investment questions, I think we can call it a night.
for sure, for sure. All
All
right, good conversation. Thanks, everybody.
right, thank you. Thanks,
Thank you.
Morley and everyone else. Okay,
Okay,
all right. We
Take
have to check, Rich, we have to check. The problem is that I attribute the decline, we used to average 20 to 25.
Right?
20 to 30, actually. And now we're down to, we had today 11 people at the max. And I think that is due to the way we're communicating with the general population. I mean, I have people who are members, but we're sending out notices to the entire community. I don't know what the problem is. Maybe the topic? I don't think so, though.
I can make one recommendation.
Right.
Right, Len, let me tell you something. If you go to the New Jersey website and you look at the number of cases since this COVID began, and you look at last spring, you will also see the numbers begin to drop dramatically. And it's a seasonal thing. It's because the direct sunlight kills the virus outside. Okay, so, although people are getting vaccinated and get really happy this is all over, it is not over. We will see if it's over in the fall. Okay, we may be back to wearing masks and maybe
Can
we
I make
won't.
a
No, I'm
suggestion?
talking about meeting notices.
Yeah, go ahead. He's
Len.
talking about this meeting.
All
Yeah.
right,
Go
Len,
ahead,
can I
Richard.
make a suggestion?
Yeah, sure.
Let's take a cue from what the men's club does. They will send out the links constantly. And as you get closer to the event, they are sent out on an accelerated basis. Well, I look for, luckily, when I got my investment company link, I made a note. It came on my to-do list. It came out on May 9th, so I know where to find it. I
There
think
you
you got
go.
to send the link out more times, like maybe this
I
morning.
had trouble finding the link.
Just tell Dami to do that, and she'll do it for you.
Okay.
I think that's a good suggestion, Len.
Len.
Maybe to take that suggestion, sure.
Totally agree. I had to go search for the link and I had trouble
There you
finding it.
go.
Yeah,
Oh, I just read the word
Give
investment.
that,
and I
give that
found
a
it.
chance.
Okay.
All right, guys, we'll see you next time.
Bye.
Thank
Good night, all.
Right.
thanks a lot. Okay.